Janus Living, a unique and differentiated company, 100% senior housing, 100% shop, with a balance sheet that's positioned for growth with no debt and, at least today, almost $1 billion of cash on our balance sheet. We have an asset base we think is big enough to be public, but small enough that external growth can really move the needle. So we think across the entire REIT universe, Janus Living should have an earnings growth profile that compares favorably. So Janus Living is a new REIT, but we're certainly not a new entrant. A number of us have been in this business for more than 2 decades. And really the process began a year ago in the summer, working with our advisors, just thinking about what could we do with our senior housing business to capture the value. It was clearly being ignored inside Healthpeak, even though it was performing exceptionally well. We considered a spin out, a sale, all the different things, and ultimately came up with this really creative and unique transaction that allows it to trade separately and have a strong cost of capital to grow, which it already has, but also a transaction that allows Healthpeak to continue to benefit from that business. So we're still the 82% owner and therefore benefit from all the internal growth. And as Janus Living executes on its growth strategy with third-party capital, Healthpeak is going to benefit from that accretive acquisition opportunity. So we couldn't be happier. It's almost $300 million of NOI in that senior housing business that had been valued at a 9 to 10 times FFO multiple. Today it's closer to 30. So it really has been embraced. It's worked out even better than we could have expected. It was a lot of work to get there, but it's 12 months of work from idea to execution. I mean, senior housing is clearly in a virtuous cycle today. We think that does have legs, just given the dramatic growth in the elderly population who utilizes our communities and the high cost of construction. Supply risk has always been the biggest concern in that sector, but today the cost of construction is just really high, and it's difficult to bring competitive new supply. So we see demand continuing to outpace supply for a number of years. Looking forward, that's clearly been the case over the past couple of years, and that's being recognized in the public markets, which explains the really strong multiples that these companies are trading at. I mean, operating execution is definitely the biggest risk factor in the business. It's a 30 to 35% margin business. When things are going well, that's a benefit. When things are tougher, that's obviously a challenge. You get the multiplier effect both ways, but it's more than just a real estate business. There's a hospitality aspect to it. There's a healthcare aspect to it. And of course, with REITs, we are required to utilize third parties to actually operate the properties day to day. So picking the right operators, having aligned contracts to execute what's a very tough business day to day, demanding population, that's probably the biggest risk to the senior housing sector. It's the only healthcare REIT that's 100% senior housing, and it's also all structured as RIDEA. So we capture all the upside, no triple net leases, a balance sheet with no debt and $1 billion of cash, and really, really deep relationships to drive deal flow and therefore great internal growth and external growth. So it ultimately comes down to earnings. And we do think Janus Living is going to be unique in that combination of internal and external growth to drive earnings for our shareholders.